Guys, how's it going? Happy Friday. Amir and Ray here with the MIU. That's the Mortgage Intelligently University, guys. Today, we're going to have Ray talk. You know, if you guys notice, I always give him the hard subjects to discuss. I take that easy layups. But anyhow, today, Ray is going to discuss APR, guys. So APR comes up a lot when we're talking to borrowers and families that we're helping. You have your interest rate, which is whatever it is, fixed for whatever period of time, or if it's an ARM, whatever that is. But you have your interest rate, and then you have the APR, which is the annual percentage rate. Now, these are not always the same. APR can be higher than your actual interest rate. And the question always comes along, why is the APR higher? So today, Ray is going to jump in and discuss APR and tell us why it's important, what it signifies, and we'll go from there. All right, Ray.
Thanks for the intro, Amir.
Hey, my pleasure.
Yeah, why do I always take the hardest subjects?
That's what you're here for.
That's a good question. I get the shorter end of the stick on these. I'm happy to discuss this stuff and educate everyone out there. So APR and interest rate, yeah, definitely a common question we get asked by our clients, especially when they receive the paperwork and which disclose the APR and the interest rate. So the interest rate, like Amir said, is simply your note rate. That's the interest rate that your mortgage payment is based off of. So principal loan amount, you know, with the interest rate amortized over 30 years, there's your principal and interest payment. The APR involves a couple more things. So the APR in essence is what the entire loan is costing you as a percentage rate. So you take your actual interest rate. So let's say, for example, if your interest rate is 5%, and then let's say if there are lender fees associated with that particular transaction, those lender fees as a percentage, you know, are determined by a percentage. So if, you know, not knowing exactly what the numbers are, but let's say you have maybe, you know, $3,000 in lender fees. Well, that $3,000 may equate to 0.25%, right? So your APR would be your 5%, and then your $3,000 in lender fees, which equates to 0.25%, which now makes your APR 5.25%. So now your APR is 5.25% because that's the total cost of the loan versus your interest rate of actually 5%. So why is that important? While shopping for mortgages and mortgage rates, you always want to always shop the APR. So the interest rate is important, obviously, because that's based on your mortgage payment. However, the APR is going to tell you how much that interest rate is costing you. The further away the APR is from the interest rate, the more costs are associated with that particular transaction. So in comparing apples and apples, you know, you definitely want to shop interest rates, but you always want to follow that up with what's my APR for that particular transaction. So go ahead. I mean, you have a question?
I was going to ask you just that's a good point. So you could use it as a shopping tool. So for example, let's say you have a family that's refinancing. They come to MCF Mortgage and we qualify them for a rate of 2.99 and let's say an APR of 3.125. They go to lender B and lender B qualifies them at a rate of 2.99, but their APR is, let's say, 3.189. Does that mean that lender B, although they're giving the same rate, they have a higher fees associated with the loan than we do?
Exactly. That's exactly what that means. Is that so even though they're matching the rate, right, their fees are actually higher for the borrower to get that particular rate. So that's exactly what that tool is used for, what the APR is used for, to ensure, you know, that borrowers can compare overall closing costs from the lender, right? To ensure that they're comparing apples and apples. I just had a situation just a couple of days ago where the borrower was comparing us to, you know, Honda Finance, for example, right? Because they worked for Honda. So during that transaction, you know, we quoted them a rate. They said, well, Honda Finance is offering me a rate that was, you know, 0.25% lower. And I said, okay, great. So, and I know that our rates are always uber competitive, and 0.25% lower, I found that a bit odd. So I asked them, I said, check them out and make sure they're not charging you any fees. So of course, you know, he did the next day, We spoke the following day and came back to me and said, oh, you know what? It was actually that rate with a 1/4% lower included, X number of points associated with it.
Mm-hmm.
To match your rate, the APR was a 1/4% higher than what our APR was. So I said to him, so he says to me, oh, they had the same rate, right? Because technically it's the same interest
Yeah,
rate,
it's the same rate.
right? Same interest rate. So I said, great. So what was their APR versus what I was giving you for APR? Oh, well, their APR was 3.6 something. Our
Wow.
APR was like 3.3, right? So I said, so, just to make sure we're on the same page, just want to make sure I educate our clients as well, right?
Absolutely.
And I explained to them, and I said, well, look at the total costs that they're charging you, right? Are there discount points, origination fees, processing fees, underwriting fees, closing fees, doc prec fees, commitment fees, right? Whatever junk fees, are there fees on whatever document you're looking at? Oh yeah, there's I think it was almost like $4,500 in fees, right?
Right.
So there's your difference. So they're matching the rate, but they're charging you $4,500 for that rate where we weren't charging you anything. So it's not an apple and apple comparison.
No, it's
Our
not.
deal is clearly much better.
The winner. You're right.
Right.
So again, that you have the same rate and Honda Finance is giving the same rate, but in the overall, when this buyer or this borrower goes to the closing table to consummate this transaction, your APR shows that your loan is a cheaper loan. They have to bring less closing costs. So it's a tool, guys. Ray said, you got to educate. We want to educate our watchers. We want to educate the families that work with us. Financial literacy is very important. It's not apples to apples. Offering the same rate is not apples to apples. Offering the same rate with the same APR is apples to apples. But then even from that point on, there's other things that we could nitpick and drill down to see what your overall cost is. Who's their title vendor? What other fees are they including for God knows what? But on a very plain level, this is a good way of comparing the actual cost of loan. Ray, some loans have really high APRs. Does that mean that it's an expensive loan?
So not necessarily, right? So now we're getting into different. So everything I mentioned earlier, we're talking, conventional conforming loans, right?
Right.
So now if there are loans, for example, like, an FHA loan or a VA loan, which have, financing fees and mortgage insurance fees that are rolled into the loan, right? So FHA with the 1.75% upfront mortgage insurance that premium that they charge, right?
Right.
That's a fee, right? And it's a fee for them to obtain that loan. If the borrower ends up paying that amount and gets it rolled into the loan, that's going to really increase the APR, right? Considerably, especially when they're comparing it to a conventional loan, right? So it's another great tool to understand. With an FHA loan, you're going to have the APR much higher. There's going to be a much bigger delta between the interest rate and the actual APR. Same thing with VA loan or a USDA loan. Any loan where you're rolling in some sort of closing cost, right? Some sort of insurance premium or something like that, right? You're going to have a much higher APR than you are going to have a mortgage interest rate. But just like any other loan, right, you still want to compare your APR, right? Because in addition to the insurance, the lenders still tack on their additional fees, discount points, origination points, junk fees, commitment fees, they name it, right? So although, yes, higher, you still want to make that comparison.
Got it. Okay. So it is different loans will have different APRs. It's important when you're comparing APRs to make sure that you're comparing the same loan product, whether it's a VA loan, USDA, FHA, conventional. Ray, this is extremely helpful. APR is a big topic. A lot of people do not know how it's supposed to be used. And by the way, guys, not to just teach you guys about home loans and APR and home loans. APR is when you go buy a car, there's an APR as well too. lot
Credit
of things
cards,
that
everything.
yeah, when you finance things over a long period of time, there is an APR associated with it. So going back to your example, now let's say you were actually buying that Honda, all right, and it was 20,000 at an interest rate of 2%. You know, when you're shopping your dealerships, make sure you shop APRs as well to see what the dealership has junk fees. Again, that's just as a side note to let you guys know this financial literacy when it comes to your actual house carries to other aspects of your life too, your credit cards, your cars, things of that nature. One thing, guys, to keep in mind also, some of you that are homeowners, what Ray just went over about on the APR is we also get a lot of calls for, hey, I got this letter in the mail and it's showing this rate. And a lot of these unscrupulous lenders try to make their letter appear like it's coming from your mortgage company, pushing you into a refinance transaction. And they advertise these enormously low fake rates, but they never advertise the APR. It's important to know the APR. If you are in that scenario, call your lender, whoever your lender may have been, call us, and we could actually calculate the APR for you to show you why you're being bamboozled, and maybe you need to stay put.
The other piece also, a lot of folks, you know, especially nowadays, you know, they go online and they see interest rates posted all the time, right?
Right.
Online on you know, bank websites, lender websites, you know, the lendingtree.coms of the world and so forth, you know, just anywhere online, there's always interest rates posted, right? I mean, I see advertisements all the time from, you know, the company that sends rockets up to the moon, right? They you know, with interest rates starting in the ones, right? But if read the fine print, right? Read that fine print very thoroughly, right? To see what the APR is. So and the fine print with all of these advertisements, even online, even with banks, right? They'll show interest rates or post lower interest rates, but then, you know, you realize that those the APR is much higher, right? But people, and you'll notice there's a reason that they post an APR in, you know, super small print, right? So you don't know that, you won't find out until you're actually into the transaction, right? That the loan has a bunch of junk fees and additional fees associated with it that, you know, you probably shouldn't be paying for.
Absolutely. Guys, hopefully you guys found this very helpful. APR is important. Take note of it if you are in the process of buying or refinancing whatever asset you have. It is going to be there. If you want us to look at a quote you may have had and get a second look at it, or another backup quote, we'll be happy to provide you one. APR is important. As Ray said, it is based on the type of loan. So some loans have a very high APR in comparison to the interest rate. Some don't. Some could be even, but it's a great shopping tool. Ray, thanks so much for all the helpful information today, guys. Catch us every Friday at the MIU. Talk to you soon. Have a good one.
Have a great weekend, everyone.
Bye-bye.